How did Warren Buffett go from selling chewing gum as a kid to becoming one of the richest people on Earth? Let's walk through the smartest investments he ever made and how they turned into billions. At age 11, Buffett bought his first stock, 3 shares of City Service, at $38 each. He sold at $40, then watched it soar to $200. His takeaway? Be patient. That $114 investment didn't make him rich, but the lesson did. Estimated wealth at the time, $1,000 saved from newspaper routes. In 1956, Buffett launched his own investment partnership with just $100 of his own money. Over 13 years, he averaged 25% annual returns, beating the market by miles. Smart bets like Sanborn Maps and Dempster Mill turned thousands into millions. Estimated wealth in mid-1960s, $20 million. When the American Express stock crashed due to the salad oil scandal, Buffett invested nearly 40% of his portfolio. He trusted the brand, and he was right. The stock bounced back and multiplied over time. Estimated wealth in late 1960s, $30 million. Buffett bought struggling textile firm Berkshire Hathaway in the 60s. He later admitted it was a bad business, but he turned it into a holding company to buy better ones. That's where the real compounding began. Estimated wealth in early 1970s, $35 million. In 1972, Buffett paid $25 million for See's candies, making only $4 million per year, but the brand had pricing power. This deal taught him, great businesses with moats are worth paying for. Estimated wealth early 1970s, $50 million to $70 million. In late 1970s, Buffett returned to Geico, the company he studied under Graham, and invested while it was struggling. Eventually, Berkshire bought it outright. Today, it's one of its most valuable insurance businesses. Estimated wealth late 1970s, more than $100 million. After the 1987 crash, Buffett invested $1 billion into Coca-Cola, one of his all-time best moves. He saw an unbeatable brand and predictable cash flow. Estimated wealth early 1990s, $4 billion to $7 billion. In the 2008 crisis, Buffett bought BNSF Railway for $34 billion. It was a bet on America's infrastructure, and one of Berkshire's biggest sources of cash today. Estimated wealth post-recession, $40 billion to $50 billion. In 2016, Buffett shocked the world. He bought Apple, not for its tech, but for its sticky customer base. That $35 billion bet? It's now worth over $150 billion. Estimated wealth today, $130 billion. Here are lessons Warren Buffett learned from his investment successes. 1. Patience beats timing. 2. Buy great businesses, not just cheap ones. 3. Moats matter. 4. Use crises as opportunities. Buffett is not a god. He still can make mistakes. Along his investing life, he made several mistakes, but he always learned lessons from them. Let's recap some of the mistakes he made. Buying Berkshire Hathaway at 1962. Mistake. Bought a struggling textile company out of spite after a management dispute. Why it failed. Buffett let emotions cloud his decision. Instead of walking away, he bought more and inherited a dying business. Lesson. Don't let pride or ego drive your investment choices. At 1993, Buffett bought Dexter Shoe Company for $433 million using Berkshire stock, not cash. Why it failed. The company was quickly outcompeted by cheap imports. It collapsed, and worse, the Berkshire stock used would be worth over $10 billion today. Lesson. Never use your best asset to buy a worse one, and beware of moats that can disappear overnight. Buffett invested over $2 billion into Tesco, a UK retailer, between 2012 and 2014, while ignoring signs of accounting and strategy problems. Why it failed. Tesco issued profit warnings and got caught in a scandal. Buffett hesitated, then exited with a $444 million loss. Lesson. Recognize mistakes early and fix them fast. Delay can be costly. From 2015 to 2020, Buffett backed the merger of Kraft and Heinz, but underestimated how much consumer tastes were shifting away from traditional processed foods. Why it failed: the company took massive write-downs, lost market share, and Berkshire had to mark down $3 billion plus on its investment. Lesson: brands without innovation can lose relevance fast. A strong past doesn't guarantee a strong future. Here are the lessons Buffett learned from these mistakes. Don't let emotion drive decisions. Never trade long-term assets for short-term bets. Admit mistakes early and move on. Strong brands still need innovation. From humble beginnings to billion-dollar bets, Buffett's fortune didn't come from luck. It came from patience, discipline, and smart investing. His biggest secret? Letting time and compounding do the work. The first $100,000 is the hardest. After that, it's a snowball. Warren Buffett. If you found this interesting, make sure to like, subscribe, and follow for more insights on money, data, and how the world works.